Welcome to Ask the Professionals, a video series being put on by CCI North Alberta. I'm Chris Vilcsak, the President and CEO of Solution 105 Consulting, and I'm also on the board of CCI North Alberta. I'm here to introduce Matt Cruikshank, who's the Senior Account Executive with Hub International Insurance Brokers. Welcome, Matt. Okay, so first, a little bit more information on Matt. Matt is a Senior Account Executive who has been with Hub International for 17 years. He specializes in condominium insurance and currently assists in leading Hub's real estate specialty practice. He entered the insurance industry in 2003 while completing his CIP designation at Graham McEwen College. Matt decided that the best way to become successful was to specialize. His focus was on realty business and more specifically, condominium insurance. Matt is also able to apply his expertise and market knowledge to exceed his clients' expectations, which leads to long-lasting client relationships. Matt is proficient in dealing with large property schedules and has put together multi-million-dollar accounts for numerous property managers in Edmonton. He is backed by an exceptional and experienced team at Hub International. Matt was recently recognized by Insurance Business Canada as one of the elite brokers of 2020. Congratulations, Matt, and was featured in the February edition of the magazine. In 2018, Matt was also awarded with the Hub Legend Award. So I have a few questions for you, Matt. First, can you please provide some information on the current insurance market for condominium corporations and where do you see things trending in 2021?
Great question. The current condominium market is in a state of turmoil and has been for the last 12 to 18 months. We are in the middle of one of the worst hard markets the insurance industry has ever seen, and residential realty, and specifically condominiums, are one of the hardest hit classes of business. A hard market is characterized by two important factors. One, higher rates and premiums, and two, shrinking coverage capacities from insurers. In a hard market, premiums rise, there are tighter underwriting guidelines, capacity is reduced, insurers exit the market, there's a greater risk selection, and there are increased claims. There are a number of factors that cause a hard market, such as increased natural disaster claims, underwriting losses, combined ratios above 100%, which is underwriting losses and expenses, and a decline in investment income due to lower interest rates. Lloyd's of London is the leader of the marketplace, and they will dictate the tendency of insurance cycles, as many domestic insurers will need Lloyd's for capacity and reinsurance purposes. Over the last couple of years, insurers have on average paid out about $1.30 for every dollar of premium they have collected for condominium risks in Alberta. Clearly, that is not a profitable business platform, and as such, all insurers have reduced their capacity and increased rates in hopes of starting to see some underwriting profit from this class of business. As we move into 2021, the market will continue to harden, and condominium corporations can expect to see about a 30% increase in premiums on claims-free accounts, and up from there depending on their specific loss ratio and history. There has not been any indication from insurers that the market will start to level out or soften in 2021.
Thanks very much for that, Matt. Now, what can condominium managers and boards do to help mitigate risk and present a best-in-class risk for insurers?
Well, now more than ever, it's extremely important to put the best possible risk in front of an underwriter with complete risk details. Insurers are very picky with the risks they are willing to write, and in a class of business that is not preferred, it is important to paint a clear picture of a good risk. One of the most important things an insurer is looking for today is that the corporation is being proactive in mitigating risk and the potential for loss, and that comes with proper maintenance procedures. As many buildings in Alberta are aging, and a lot are now at least 20 years old, insurers want to see that the corporation is diligently maintaining the building. That means spending money to replace the roof, upgrading the electrical, upgrading the plumbing and heating systems of the building, and having an annual maintenance contract in place. An insurance policy is not a maintenance tool, and if the corporation is not maintaining their building, they can expect to see declines from insurers, and the companies that are willing to look at the risk will be placing higher rates and deductibles on it if it is not best in class. Gone are the days of putting small maintenance claims through insurance, as it is very common today to have minimum deductibles of $25,000 to $50,000. Insurance is in place for large losses, and the corporations have to be able to pay for the maintenance losses that come with owning a property. So to recap, building maintenance, and keeping the loss history in check are very crucial to presenting a best-in-class risk.
Wow, that's some great information there, Matt. Thank you so much. I think the comment that you made that really rang true for me was an insurance policy is not meant as a maintenance tool, and that boards and managers really need to be proactive in maintaining their properties. So thank you very much for that. I'm Chris Vilcsak again from Ask the Professionals, CCI North Alberta. Please be sure to like, follow, subscribe, comment, actually add your comments around different topic areas you may want us to address, and we'll see you next time.